Hello everyone, and thanks for tuning in to another episode of Market Talks with Neil. And today I have another special guest from the CFD industry, a veteran, Mr. Omar Amin. Thank you for coming in.
Thanks for having me, man. Happy
My
Friday.
pleasure. Now, as I said, Omar, Mr. Amin, is a veteran in the industry. He's been a tutor to a lot of people, provided a lot of help with CFD traders. And today, if I'm not mistaken, you're gonna share some of that knowledge, maybe a strategy or two with our audience.
100%, 100%. I've managed for the past 14 years to change a lot of lives. Especially in the past, let's say, since COVID, a lot of people, they lost their jobs, lost a lot of things, and with few strategies, yes, we managed to save a lot of lives and get them back to where they were and even better.
Okay, that's awesome. That's great. I hope you guys are listening. So now, before I go in and start asking you about strategies and all that, just really briefly, tell us a little bit about yourself, how you got in the industry. As I understand, and I want to share this with you, you're a family man as well,
Yeah.
which makes you a successful person. A person with a family is a successful person. So just tell us a couple of things about you, family, work, so on and so forth.
Well, I started 14 years ago in Dubai International Financial Center, the IFC, as a financial advisor, and some family situation happened. I had to move to Cyprus, Limassol, the capital of the financial market. Yeah, and we started growing step by step, different companies. I joined YWO in the past 6 months. So far, we're doing great.
That's good. That's
Yeah,
good to know.
but we have just a little bit of issue because I deal with MENA and GCC, right? Middle East, North Africa, Gulf countries. A little bit with the Arabic mentality. I don't know. Maybe it's the human mentality. They want to achieve the most with the least.
Well, if you ask a lot of people, including myself, I would say that's not a bad idea, the most with the least, but it's not easy.
But
let's be honest.
It's all about calculations. It's all about numbers. Greediness. This is what you want. What I call it greediness. This is what you want to achieve. The biggest achievement with less effort, or with the minimum investment. Let's put it this way.
Well, some people might call this smart thinking, smart working, work smarter than harder. Some people do that. Some other people don't agree. They believe in hard work, results will come in the end. But either way, it's a point of view. Okay.
Hey, we call it a little bit of gambling, right?
Okay, that's another term that can be used as well. But before we start talking strategy, what would you say with your 14 years of experience is the biggest mistake that you see beginners do when they start trading CFD?
Greediness.
Again, you stick on greediness.
Greediness.
Can you expand on that a little bit?
Look, risk management and money management, this is two assets you have to take care of, always, always. 10% exposure, 3% your stop loss limit, that's it. The less you expose from your capital, the safer you are.
Yeah, it makes sense.
Yeah. So your money is working for you, and this is what a lot of clients, they don't understand. It's called the financial market. Your money is working for you, not the other way around. It's not like you're working hard to get a salary. So let's say the more oxygen you have in your account,
the further you can go.
yeah, exactly. The more petrol you have in your account, again, same scenario. So that's what a lot of clients, they don't understand. I face a lot of clients all right, they deposit or they invest on a daily basis or a weekly basis. All right, let's flip the scenario. Because I have a lot of clients, I see it, 2 or 3 months, their total investment, let's say, for example, I'm not just, let's say 10,000, right? Why don't you start from the beginning with 10,000 and apply risk management, money management? Use 10% out of that 10,000, which is 1,000. Instead of every day you're risking $50, $100, $300, $500, $1,000.
Well, that's the question that remains to be answered. Hopefully we're going to figure out an answer and maybe give it back to our audience and to your clients. Now, follow-up question. When you build a CFD strategy, what comes to you first? The market direction, the entry point, or the risk management?
All of them. You have to close all corners.
So it's not just I start with this and I see how it goes, how it plays.
You have to start with you close all corners, the entry point, the product, the entry point, exit point, the product.
So in other words, you're saying I decide buy or sell, okay, which is the market direction. Then I decide the price that I'm gonna get in, regardless what the trend is, buy or sell, like I said. And then again in the end, which from what you just said a few minutes ago, the risk management, how much am I gonna put on that trade, on that strategy? I don't use all my capital. I use, or maybe I do, I don't know. I'm gonna let you answer that. So,
Right. Now,
walk us through on that, like on a strategy, like from A to Z, but in a brief way.
look, I'm gonna give you an example of a strategy called 1%.
Okay, good.
A lot of people now 1%. What's 1%? We're coming to the financial market to trade to make 1%. Yes.
Oh.
Now, I'm gonna give you the example on $10,000, and this example changed a lot of lives. Right. $10,000. If we're going to speak about 10% exposure out of 10,000, how much is that, Neil?
That's one.
That's
1,000, yeah.
Right. If I'm not mistaken, you're a trader.
Yes.
Right? You trade gold, for example.
Yes.
All right. May I ask you, what's the average movement of gold on a daily basis?
Average.
If there is strong, like volatility, like CPI, NFP, or
Not
even
more than 50 points, and that's being too much. I would say 20 points max, and maybe less than that. On
So-
a daily basis, we're talking.
on a daily basis. So let's say an average of 10,
Mhm.
10 points. Is it hard for?
You would say again, 10 points would be even
Average.
better. It's the closest to the average.
Fantastic, awesome. So
10,
now,
12, 8, around there.
is it hard for any trader with $1,000 exposure out of 10,000
Yeah.
to catch 1 or 2 points on gold?
Oh, no, not at all.
I'm not saying up or down,
No.
right?
Regardless of the direction, buy or sell,
Mm-hmm.
2 points, just like that.
All right. 2
Just
points,
like
this is-
blinking, the blink of an eye.
This is the
Easily.
1%. This is the 1%. Right. If you think about it, 1% out of 10,000, how much is that?
1% out of 10,000, that's 100.
$100, right?
Yeah,
I'm gonna ask you a frank question, honest question.
yeah.
Do you, on a daily basis, do you spend more or less than $100?
Oh no. No.
No.
Personally, I don't.
So basically, this strategy we're gonna cover your daily expenses and more.
Oh yeah, without a doubt. I'm talking about maybe even after a hard day's work, like weekend, go to the bar, you then buy your friends around,
Mm-hmm.
and maybe you won't even spend 100. Okay? Or you treat your friends to like, I don't know, something. You're probably not gonna spend $100.
All right.
Not
And
probably,
again-
most likely.
And again, it's not a must that you're gonna make 1%. Sometimes, according to the market movement, you're gonna make 2, 3, 4.
Oh, without a
5.
doubt. Without
But
a
we're
doubt.
talking about 1%. Anything above 1% is extra, is a bonus.
Yeah.
Treat yourself with it.
It's like the gravy on top,
Exactly.
the cherry on top.
So if you think about it this way, 1% a day, that's 5% a week, that's 20% a month, that's 240% a year. Find me a business
So
that would do you that.
hold on, let's do the math really quick. So 1% a day. So let's say 100. Let's just assume small numbers.
Yeah.
100. You do that 5 times a week, 5 big financial days, that's 500. Okay. On average, a month has 4 weeks. So that's 2,000 a month.
$2,000.
Multiply that by 12, then you got 20. Wow. 2,400 on a year.
This
And
strategy-
that is on the simple 60 to 70% of the time achievable. I'm not trying to give any investment advice here based on, no, but this is simple math and numbers don't lie, as we all know. If you don't know this, numbers don't lie. But you know what, I'm gonna take it a step further. Even if it's 0.8%, not even 1%, it's still,
I'm
it's
being humble.
outstanding.
I'm being humble.
Yeah, but even if I bring it down a notch, okay, from 1% to 0.8, that's like $80 a day. Again, 5 times 8, that's again,
But again, it's not just the
400.
percentage. It's not just the returns. If you think about it, there is no headache, There is no nervousness. There is no nightmares in the middle of the night. Oh, I'm on a margin gold. Well, gold went up, gold went down, Nasdaq went up, went down. Like there is no nervousness. You're chilled. You're relaxed. You have your stop loss. You have your take profit. No greediness. This is what we call self-discipline.
Self-discipline.
Yeah.
And let's look at the worst case scenario. Let's assume that 5 days a week you make 5 trades, or you kept the trade open. Let's go simple. 5 days a week, each day you do the same trade, 1%. Let's assume 3 out of those days you lost. Okay? And let's say that happens twice let me rephrase that. So this week you lost 3 times, and the following week you made okay, but the week after you lost again 3 times. So your loss, let's think about this. So your loss, again, this is not invested advice, this is just simple math calculation for you guys out there to think about. So your loss is 600 out of 10,000, peanuts.
Of course.
Peanuts.
Of course. And it can easily be recovered.
Yes.
But again, I'm talking the right asset. Like let's say, for example, what are the assets that they have quick movement?
Well, currencies are the number one. They have the most volatility, I would say. Then you have the hard commodities like oil and gold. Then we go to lesser things like shares and indices, but that's a different story. If we want to talk about most volatile assets, those 3 that I just mentioned before.
All right. According to the fundamentals, according to reality, the news, what are the assets that most or all the investors should focus on?
Well, like I said, again, currency, in my trading experience, currencies are number one because it's liquid, okay? Every other asset you want to acquire, trade, you need liquid, you need the currency. So currencies, like I said, it's the one that, it's volatile. Every single day can change, can climb up. After a couple of days, can climb down, but then again, within the same day, can climb up again. And then you have gold, which is the safe haven.
Assets, correct.
Exactly.
Yeah.
And then from there, oil. And then oil, sometimes it can be more volatile than gold. But those 3, like I said again, I'm going to go back to those 3. Now, here's the thing, though, because we mentioned liquidity. Indexes, again, tend to have some kind of serious volatility when the market is hot.
Speaking of which, for example, the Nasdaq or Dow Jones, right?
Yeah. Correlated with the dollar.
Is it hard to catch $2-3 movement on the Nasdaq on a daily basis?
Not at all.
Like if you have an index,
2-3 points only.
Yes, if
it can happen within minutes.
Hundreds of dollars a day.
It can happen minutes. Let's say seconds.
That's what I'm saying, but again, it's not
on major indexes.
guys.
Yeah, it's not guaranteed on major indexes though. And I'm not just talking about US, I'm talking about European indexes. Like FTSE, like
DAX.
the CAC, the French, DAX, the German, easily major indexes. Even Asian indexes now are showing the same response. So 2-3 points on that. I mean, let me show this in some kind of a gesture way.
I'm gonna tell you what happened to one of my clients.
By all means, share this. I want to hear this.
All right, we agreed that on the Nasdaq, on the major indices, it's easy to catch $2-3 movement, right?
More than easy, yeah.
All right, imagine if you set your take profit on.
I'm just gonna more than easy if you study, if you do your homework, if you're careful.
And if you're trading with a professional.
If you're trading with a professional, and don't treat this like I'm lucky and it's gonna happen for me. No, you gotta know the reason why you choose that direction, so on and so forth.
Exactly.
But I'm sorry, keep going.
I had a client, like for example, 3 months ago, and he was like, Omar, what if I target only 25-cent movement on the Nasdaq 5 times a day?
Okay, that's a solid question because it's very doable, very achievable. Very, very achievable. But I like the way the guy thinks, only 25 cents.
Do it 3-4 times a day. Even on gold.
Even on gold, that's again.
Any quick movement asset. But there is a mistake that a lot of investors, a lot of traders, they mix the quick movement with oil. Well, oil, not on a daily basis, moves by dollars. People need to understand that oil moves by cents. So when I say, let's say, target 25 cents on oil, this is a quick movement.
That's $0.25.
Yeah, this is a quick movement.
Yeah.
When we say gold, like, all right, catch $3, $5, that's a quick movement.
Yeah.
The Nasdaq as well.
Yes, because
That-
of the big volume that they
Mhm,
create,
mhm,
of course.
No, you're gonna hear me speaking about the Nasdaq a lot because
As I understand, it's your favorite asset.
yeah, and it changed my life a lot.
Fair enough.
Changed my life a lot and changed a lot of lives.
Did it work for you? Obviously, you said change a lot of lives. So obviously, it's working. So here's another quick insight. Not all assets, work for all people. So if you're a beginner trader or if you're here to learn something, know this. There's always one asset that it's gonna work in your favor. Do you agree with me?
100%, 100%. I have a lot of people who be like, no, I'm comfortable just to trade gold.
That's
I'm
fine.
comfortable. Like I feel safe when I trade the Nasdaq.
That's a smart trader.
You tell him
He's not
oil.
chasing
You
everything.
tell him oil. No. Oil is. I'm scared of oil. Scared.
Fair enough.
Mm-hmm.
Well, think of it this way. The lion is the king of the jungle.
Yep.
Okay, but he stays away from the elephant.
Mm-hmm.
And then the elephant, he's the biggest animal in the jungle, but do you believe that he's afraid of mice?
Mm-hmm.
I mean, how does that make
No
sense? Yeah, but it does. So the same thing applies here. Like you said, some people love to trade indexes, and they say, stay the hell away, gold, stay the hell away from me.
Natural gas, etc.
Because this is what works for them,
Mhm.
and vice versa. So
Because once you get your emotions in the business,
Mhm.
you're out. You're gonna make a mistake. 100%, you're going to make a mistake.
So again, I want to go back and ask you to share with us, if you don't mind briefly, that strategy again, because based on what you just said, people need to understand this a lot more. So
Does it make sense to you?
It makes a whole lot of sense to me.
Mm-hmm.
Okay, as a matter of fact, I'm thinking about it, and let's talk later. But anyway, okay, that's between you and me. So share a little bit more about that 1%. Not just like it's only 1%. Let's assume, okay, for those that they keep on depositing every week instead of picking up a big sum of money and throwing it in there, let's assume for those kind of people that they're listening now, they wanna hear this again. For those kind of people that they lost money, can you, like again, repeat it? 1%. Let's do this. Let's
Look,
hypothetically, of course.
Yeah, of course. The reason behind this strategy is to teach the trader or the investor
Uh-huh.
self-discipline.
Repeat that, please. That's the reason that I asked you again.
Self-discipline.
Yes.
To
Okay.
put a target to themselves, 1% a day, or even 0.5%, but let's assume 1%.
Let's say the one.
Now,
And
$10,000 investment.
I'm gonna pause you for a 2nd
Mhm.
Let's say the one. Let's say they made that profit early in the day.
Mm-hmm.
Let's say after 2 hours the market opened, these guys did exactly what you said, 1%. And then again though, you hear in the news and you hear left and right on that specific asset that it keeps on climbing. What should they do? That's why I want to
That's
emphasize it.
self-discipline. You need to
Stop.
have time.
Don't
Only
repeat.
1%. All right, 1%, depending on the product that you would love to trade on, and then you got it. You switch off your laptop, shut it off. Have time for your family, friends, other businesses. That's it. Because yes, we heard that a lot. The assets keep on climbing, and then when they swipe all the liquidity from the market, what's gonna happen to your account? Boom,
That's it. Gone. Come back some other time.
boom.
Yeah.
And you'd be like, Omar,
Yeah. But Omar
what I
said,
told you so.
Omar said
I
1%.
told you so. 1%, again, 1% is 5% a week, 20% a month, 240% a year. Tell me your business. Show me your business.
There's
And I
no
will
business.
quit this business.
No, don't. So that's the reason that I ask you to.
But again, how
Yeah.
many times
Uh-huh.
happened to you that you made over 10% on a trade or 10% a day?
Not that often. No. 10% a day? No, not that often. Even though there was room for it,
Mhm.
okay, I said, take it easy,
Because you are self-disciplined.
take it easy.
You are self-disciplined.
Don't be a greedy idiot. Don't just, hold on to it. The market is gonna
Guys,
keep
you see-
working. The market is gonna keep working long after we're gone.
With or without you.
Yeah, without me.
With or without
So
you, yeah.
just take what you got right now, be happy, and then we'll see what happens the following day. That's what I'm saying to myself.
Exactly.
And quite frankly, I saw quite a lot of times the market, like I did, I gained, and then it kept going for whatever the reason. Geopolitical event, announcement, data announcement, so on and so forth.
But no regrets. No regrets.
No regrets.
You got your 1%, you got your 2%.
As a matter of fact,
that's it.
I'm gonna be honest with you. In the beginning, when I first started trading live with money, the spark, the bug, even though I made my profit, was coming back. Maybe you should do it again, and so you don't have to work tomorrow. But then again, I used to say, okay, don't be lazy about tomorrow, and don't be a greedy jerk.
100%.
Okay?
100%.
Because you don't know what if things flip.
Mm-hmm.
What something happens, nobody knows the future. You got what you wanted, you're happy, shut up, go
Continue,
home.
yeah. Continue
Go
your
home.
life. Continue
Yeah.
your normal life.
So, follow-up question on this 1%. Where would you say this strategy would apply? Is it on indexes? Can it be, well, let me rephrase it. Can this strategy be applied on currencies, on commodities, on indexes, on stocks, on where?
Look, my favorite market, oil, gold, and indices.
Mm-hmm.
I don't do much of Forex
Mm-hmm.
because, my humble point of view,
Mm-hmm.
if you're gonna trade on Forex, the profit you're gonna make today is what you're gonna lose tomorrow, is the money you're going to remake it after tomorrow, and so on and so forth. So basically, you're wasting your own time, your own energy.
Fair enough.
But if you're trading on a safe haven asset, or for example, oil, the black gold, or the US tech,
Yeah.
right? Technology is not gonna die anytime soon.
Oh no, it's gonna even grow bigger.
Yeah,
as we
now
go.
the AI, robots, this and that. So we're sticking to more or less safe haven assets.
Good enough.
With the Nasdaq, with gold, you have to take care of technicals.
Mm-hmm.
When it comes to oil, you have to take care of fundamentals. So you have to combine all corners together.
Good. Are you guys listening? Good. And with that, I have another question.
Before you go
Yeah.
for that question,
Yeah.
I have a lot of clients that be like, Omar, what are you saying making sense? But
Mm-hmm.
it's risky. 10,000 is too much, or 20,000 is too much. I'll be like,
If I had
let's go on a demo account with the same investment.
I'm sorry, I'm gonna say something. If I had a dime, if I had a cent for every time somebody kept telling me it's too risky, I would have been a gazillionaire. I mean, Elon Musk wouldn't have a chance right next to me. Yeah, the markets, the financial markets carry a lot of risk. Okay, but here's the thing.
There is risk in each and everything in life, even
Exactly.
by crossing the street.
Exactly. Thank you. All right?
Mhm.
You step out the door right now. You never know the building might fall. I mean,
You
knock
never
on
know.
wood.
You
Yeah,
never know.
knock on wood. So yeah, the risk is involved, but then again, like you said, there is risk on everything. However, risking 1%, I'm sorry, but I'll go like this. If I was to face a lion, again, we're going back to the
Yeah.
jungle. Okay, my favorite way of saying
Mhm.
financial markets. If I was to face a lion, but I had only 1% of dying, I will face the whole herd.
Exactly.
Okay?
Yeah.
And I'm not trying to be a smart ass right now, but
And again, if there's no risk, no reward. You gotta take the risk in order to change something in your life.
yeah, I'm
Yes.
taking the risk of like taking that lion's mane
Mhm.
or canines or claws or whatever, okay, which I can sell it later and make some money. In
Yeah.
other words, again, I hope I'm not being too vulgar, but again, let's just say I'm running into the F1, I'm racing F1, and I have 1% of dying. Again, knock on wood.
But you have 99%.
Yeah, to finish, and let's face it,
Yeah.
racing at the F1, and being able to finish and having all that experience and knowledge and all that at some point,
Adrenaline.
all the good things, all the great
So
things that
what, you're going
happen.
to stop 99% of happening for 1%?
Of course not. Of course.
And speaking of Elon Musk, by the way, because I
Yeah.
get this question a lot.
Yeah, what's up?
They ask me like, Omar, if you know these kind of strategies. By the way, guys, it's just one strategy. If you want to learn more, reach out to YWO. Omar,
Yeah,
Amin.
Omar
Now, a
Amin.
lot of clients, they come and ask me, Omar, if you're really good at this and you have these kind of strategies, why do you work?
Why? Why not?
And I mentioned Elon Musk. I mentioned Donald Trump. Do they need money on a daily basis?
Warren Buffett.
What?
I mean, the list can go on from here to Mars and back. And there's so many people that they make money that we don't know about it because somehow they're not into the financial spotlight, financial market spotlight. Those guys that we mentioned are. But I can make the Cohen family or the what do you call it? The fashion guy. Quite a few of them. Yves Saint Laurent and Armani and all that. Do you?
Jacob and Co.
Yes, those guys. Do you think they stopped working? I mean, all they had to do, these guys, all they had to do is just sit back and say, you're the manager, you did this, you did that. Come by once a month and tell me how am I doing with profits. However, every
It's
single
addiction,
day.
Neo. It's addiction. It's the healthiest addiction, guys. It's the healthiest
But
addiction.
why should you? See, that's the thing. Why should you stop when you're good at something? And when you're good at something, listen to this. When you're good at something, why do it for free? So you work to get paid, or because by working you develop even more. Here's another thing: if I'm that good at it,
And again, it's a matter of, let's say, for example, like you are my client, right?
yeah,
You heard about the strategy, 1% strategy. We tried it out together, succeeded,
Yeah.
right? What you gonna tell me?
well, honestly,
What you gonna tell me?
well, besides thank you and God bless you and all that,
No, that's what I need. And again, for how many clients I'm gonna get
I was
from
gonna
you?
get, I was actually gonna, that was
Yes.
my second point, like,
How many clients you going to refer?
oh, you're gonna get clients. I cannot tell you the number, but I can tell you that you're gonna get clients because I trust you.
So
Because obviously
my main purpose is to apply it with you. You succeed. You tell each and every one in your circle, this is how I succeed. So your success is out of my success. So I need to help you. I want to help you to get more clients, more data. In this business, it's everything is online. So it's your name.
Yeah, of course.
Yes.
So it's not just the monetize or the financial reward. It's the satisfaction, the personal satisfaction that you actually did something for somebody, made him happy, so you touched his life in a sense.
And again, like when we came back from Nigeria, from Lagos, when we came back recently from Syria, it builds up your name.
Of course, why not? Why not? And that sometimes it's more important than money because money can be made and lost.
Yeah.
But actually, your own personality and how much you contributed to this world, life, and all that, it's unreversible. So
That what
yeah,
we're looking for.
exactly.
With
So,
YWO.
if it makes you happy and you love it, why not? So, with that again, I need to ask you something else.
So,
Let's assume, or actually, let's go differently. Would you teach not just this strategy and other strategies to people that they would sign up and come to you, as well as to people that they messed up big time for whatever the reason, they lost money, even though some of them could have been your clients and you told them and they didn't, and now they realize, oh, you know what, Omar was right. Maybe I should listen to Omar. Would you do that, or would you just tell him, you know what, you idiot, I was telling him you didn't listen?
I told you so. Not about again, I told you so, but I'm here to help. I'm here to recover. I'm here to build up a recovery plan.
So,
Because once the money's the equity's there, everything can be recovered with risk management and money management, with calculations. Now, I promise you, before we even started this episode,
yeah,
that I'm going to mention only one strategy.
yeah.
But guys, I'm going to give you another one.
You sold the man. You know what, I'm listening as well, besides already, so go ahead.
Now, this strategy called high volume, low risk. High volume, low risk.
Well, how does that play?
All right.
Yeah, high
Now-
volume, low risk.
I'm going to give you two scenarios, right? The target out of both scenarios is to make $10,000 in profit,
Okay.
right?
Yeah.
The first scenario is investing $1,000 on gold, let's say, on gold or Nasdaq, and to target $10 movement, or to invest $10,000 and to target $1 movement. Which scenario is
More appealing.
and quicker?
What? 10. Okay. I'm a little bit hesitant to answer. I hope people don't get this as an investment advice, but I would go with the $10.
With the $10.
Yeah.
Why? Do you guarantee that gold or Nasdaq or will move $10 in one shot?
No, I cannot do that. However, though, the greater the volume, okay, the greater the return. It's.
And you target as very slow movement, very small movement.
Yeah, you don't overdo yourself. You don't put 20, 30 pips take profit. You just do 10, 12. But however, if you put 10, 20 pips, points, on a take profit on a $1, it's let's say $10, $12. Multiply that by 10, okay?
So it's 10,000. That's 100% return.
Yeah.
Let's make it even better.
Yeah.
If you're gonna target 50 cents, half a dollar,
Yeah.
that's 50%.
That changes a lot of things because now you're being way safe. Now you're safe,
Mhm.
okay? Even if the worst can happen, what's peanuts compared to the whole tree? Nothing. You won't even notice it, okay?
But again, the client comes like, oh, Omar, that 10,000 is too much, it's risky. Again, stop loss on 3%. And we're using 10% exposure. So in order to expose the 10,000,
you won't be exposed if you think about it, because you're setting up a very tight loss beforehand, before you even start. You have a tight loss, and if that loss happens,
and I ask you straight
that's
away,
it.
if it's
Stop.
in gold or Nasdaq, please, Neo, open the chart. Numbers don't lie, the chart never lies.
Okay, it's very possible. Like I said, on an average, gold, because I trade gold, moves around that mark.
Who doesn't?
Sometimes over, like maybe 15, 18. If you are a tech guy and you want to use technical and you want to use this and that, you can surpass it. But that's if. Okay? And in order to become that if person, you got to spend a whole lot of time practicing, using money. I mean, it's not the easiest path. A lot of people do it. I'm not against it, but it's not the easiest path. It takes a lot more time than usual. I mean, it's more than a full-time job. What am I getting at? The less, actually not the less, the standard is around that $10, 10-point movement. That's there. It could be 6, it could be 8, it could be 9, it could be 12, around that area. And it's almost on a daily basis.
The average movement.
Okay. And here's another kicker. It might be minus early in the morning on like European times on 5, and then all of a sudden it can be +6 or +10 on US time. If you want to wait a little bit further into Japanese time, it can even continue from there. So again, even if you're on a loss, it can easily reverse. If you're on a profit, watch it, don't be greedy, stop. I'm talking too much, I know. Yeah, but I think you get the point.
When we expose 10% out of the initial investment, so how much you have in protection? 90%, right?
Yeah.
All right. When was the last time that gold crashed at 90%? Or gold went down by 90%?
You really want to know this? Okay, that was back
2008.
No, they didn't even crash.
So we call it a financial crash.
The
A global financial crash. If the product will go 90% against you.
90% against you.
90%
The only
against
time
you.
that I
That's a
can
global
actually,
crash.
the only time that I can think of that was the Great Depression around the 50s, 60s. You and I were not even born. Okay. So no.
That's what I always advise my clients.
90% impossible, man.
Avoid the headache, avoid everything. Be on this. I'm not saying it's safe 100%, but again,
as a matter of fact, you want to be historical, or you want to be accurate. Gold would never crash at 90%. Why? Because besides the fact that it's a safe haven asset and most traders blah 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 yada yada yada, it's owned big chunks of gold. It's owned by governments.
Banks.
Governments, exactly, but governments, worldwide governments. Like the US is the #1 in reserve, but then again, right after that is Germany, and then, China.
China.
Do you actually think that they would let gold crush? As a matter of fact, the minute they see it started crushing, they're going to issue buy orders. Okay?
Exactly.
For 2 reasons. Reason #1, it's in a low price, let me supply and get more reserve for money. Now, what happens when you buy? The price keeps going down or reverses.
Reverses.
So 90% crush on gold, it cannot happen, man. It's like The sun rises from the west. It's impossible.
All right, the same will go with the tech sector, with the technology.
Especially as things, again, it's impossible.
It could happen only with oil, and it happened when? COVID.
Because the whole world was paused.
Yes.
But that's different. That's different.
What, every year we're gonna have COVID?
Exactly.
We're
Exactly.
not gonna face it each and every year.
Exactly. Okay, so even now with the Iran-US tension, okay, both the guys that started this, at some point they decided, let's, call it a, let's calm down, chill out a little bit, because they realized, the World Cup, a lot of things, they realized they're screwing themselves both sides, so they calmed down. So it came down, actually it did went up, but then it started coming down. And again, people behind those major assets won't let it happen. Because it's not just people, you and I, losing or traders, it's them as well.
Look, for example, like I will give you an insight about fundamentals and how we analyze the news.
Go ahead, please, I want to hear this, so as our audience.
Like everyone knows, like Iran, Strait of Hormuz, Strait of Bab el-Mandeb, right?
Yeah, major oil supply routes. Yeah.
But only few people, they know that Strait of Hormuz passes 22% of worldwide oil.
Percent passes from Hormuz.
Yeah.
What about the rest?
31% from Strait of Bab el-Mandeb.
So there is another route.
Yeah.
And
That's what happened. What happened 2 years ago when the Houthis started their attacks on Red Sea, Suez Canal, attacking the oil ships. Right. They had to switch direction all the way to. That's right next to Morocco.
I can't think of the name now, but however.
Yeah. So again, it's the history is repeating itself. A lot of people, they read the news like you, like everybody else, but the small detail, the simple details that comes from us. For example, I'm gonna tell you now, the market today will close. Tomorrow is a big day, guys. Tomorrow is a big day. Why is a big day tomorrow?
It's a Saturday. Why is it a big day?
Why is it a big day? Because tomorrow they're going to bury Ali Khamenei.
And that's
and it's not just Iran. It's not like a sad day just for Iran. It's Iran, Lebanon, Iraq.
3 major nations out there.
So, if I'm gonna ask you, do you think like US or Israel or they're gonna stay quiet, or we might face some surprises? And then the market will open, and then you will see the market gap.
Because of that.
Mm-hmm.
And all those fine details, as you just said, add up to the market.
Yeah.
And if somebody knows beforehand, okay, they can actually act accordingly or know what to expect.
Exactly.
Okay, and readjust their positions, their strategies, so on and so forth. So it goes to say that it's not just giving you the strategy, okay, it's also giving you the manual and sitting right next to you. So you read from the manual, you apply the strategy, but every now and then you gotta ask, okay, or you gotta listen to the person right next to you who's been there, who's done that, who knows what he's doing, so on and so forth. So
that's why we're here. That's why we're here.
That's why you're here.
So reach out, guys. Reach out.
Yes, YWO. I believe this is it. So once again, Omar, thank you for coming in. Guys, Mr. Omar, Amin for YWO. Click on the link to register. Feel free to ask questions or make comments on this podcast. And again, as he said, he's willing to share a lot more than he just did today. So why not take advantage? Link, register, reach out to Mr. Omar, and wishing you all the best. Omar, again, Amin, thank you for coming in. There's an open invitation for a repeated podcast. I don't know what we're going to talk next time, but I'm sure we're going to find something interesting.
There's a lot of things to talk about.
There's a lot of things. So thanks again a lot. Thanks for coming in. Thank you, guys. Have a beautiful weekend. Thank you much, buddy.